We're back, baby. Five Fact Friday is back. It's been a while since I've done this. It's actually only been 2 weeks, but it feels like longer. And I'm actually a little bit nervous. Sorry for not scheduling the time and giving you guys more notice to be here for the live. But life, I'm afraid, too many moving parts today. I wasn't sure what time I was going to do it. I might have my plans for the day changed first thing this morning. But I'm here and I'm back, and it's Five Fact Friday. And for those of you without much time, very, very quickly, the 5 facts. The Financial Conduct Authority says 7.4 million people struggling to pay their bills, and they're announcing changes to mortgage rules from November. Interesting. The RICS has released its March survey results and a mixed picture there, which I'll go into in a little bit more detail. Fact number 3, Bank of England released its credit conditions survey results just yesterday or the day before, showing that defaults are increasing and are expected to increase, as well as demand for credit is very subdued. Number 4, Halifax reported house prices are down 1% month on month, but I still think the Halifax House Price Index is completely useless, but we'll come on to that in a bit later. And this morning, Friday the 12th of April, the ONS reported that GDP in February rose 0.1%. Are we out of recession already? So that's the quick wrap up of the 5 facts for those of you with not much time. And welcome, I'm Charlie Lambden. This is Moving Home with Charlie. This is the channel where I share my combination of my insights from 25 years behind the scenes of the moving industry as a supplier of software and technology and database services to estate agents, plus it's a long time ago now, but my background in the city as a qualified derivatives broker, futures and options, that kind of stuff. And as someone who's been in the tech world for 20 years as well. And I have a lot of contact with estate agents around the country. And what I'm trying to do here is I'm trying to bridge the huge, yawning gap between what's happening at the frontline coalface of estate agency for both sales and lettings today and what's being reported, which is just anything but what's happening today, depending on where you look at it. So welcome back to everyone. I'm sorry if you've missed me. I've had quite a few things, including a near-death experience a week ago today, which I'm in my aviation life, which is my hobby. And it took me a few days to kind of get over that. Everything's fine. No one was hurt. No damage was done, but it was close. And it was 100% my own stupid fault. But you don't want to hear about that. You want to hear about the 5 facts. Guys, also, another thing that's been keeping me busy and away from doing videos has been the work I've been doing on the Best Agent Public House Price Index and work I'm doing on gathering agents to start contributing their exchange prices to that. And if you're not aware what that is, it is a public house price index where you, as movers or agents or conveyancers or landlords or even tenants, can report the exchange price on the house you've just bought or sold, and you can report your rent, and you can report it at the link just below, but it's bestagent.property/HPI. And that actually, I just want to show you that on screen, what that looks like and what we're doing with it, because we're still very much in the preparation phase of this, okay? Let me just quickly show you this before I get into the details of 5 Fact Friday. So this is the page where you can enter your price, and you'll see that the current live total will update in real time as you enter it, because this is a transparent index. And so this is current live total, that's sales, that's rents. And then what I'm doing with the data that we get reported in there is actually then it's being published alongside the sale, so the asking prices in England and Wales for sale, sold prices, and then exchanged price here. So you can start to see now, of course, the sample size at the moment is much too small, but you can see already from the sample size that we've got, the price is kind of in the ballpark, okay? That's England. We've got the same breakdown for Wales. And this is just, we've got to make sure, because when it really gets going, there's going to be a large volume of stuff being reported, and we've got to make sure that it's working properly. So that's what's going on there. The link to that is below if you want to report your price. And please do, because it all helps. 5 seconds. I'm going to close the door. Family's just back from a shopping trip and they're going to make lots of noise. Okay, now without further ado, fact number one. Fact number one, let's get into this. So, now the links to all of these sources so that you can check them for yourselves. And also I'm going to be encouraging you to do a bit more digging into the detail of your area. So in the RICS report, for example, and in the Halifax report, it breaks it down into regions. Okay. So the links below. Oh, I've just realized. God, I really am all over the place. The link won't be live just yet. I will make sure it's live at the end of this video. I'm all over the place. Sorry, guys. This is the perils of live broadcasting. But let me get it published now. There it is. I can just click publish on it. Sorry, 5 seconds. Publish. Publish. It's published. The link below to the page of my website with links to all of these facts. Is that enough faffing for everyone now? Should we get on with it? Right. Fact number one. The Financial Conduct Authority has confirmed stronger protection for borrowers, making permanent the expectations on lenders to support borrowers in difficulty. I find it very interesting that they're doing this. For them to move and actually get stuff done like this suggests that they are expecting more people to get into difficulty. And in fact, of course, the Bank of England has confirmed in its credit conditions survey that those are the expectations of lenders. Over 7 million Britons continue to grapple with bills and repayments, which is down from last year, but above pre-crisis figures. All right, so that is actually a really positive sign that fewer people are struggling with bills and repayments compared to last year. That is good. What's being introduced? This is the interesting thing here. The new rules will come. This is on lenders. Will come into force on the 4th of November, so about 8 months away. By incorporating aspects of its tailored support guidance into its rulebook, the Financial Conduct Authority is expanding protections beyond customers who have already missed payments to those at risk of payment difficulty, and widening the forbearance options firms should consider. I find it interesting that they're doing that because it suggests to me that they are expecting more and more people to get into difficulty as more and more people come off their 2 and 5 year fixed rates. I think it's 1 million people roughly expected to do that this year. That's fact number one. Anyway, fact number two. The RICS. So this is the RICS March residential market survey of around about 200 of their chartered surveyors and agents around the country. Outlook for sales volumes continues to improve. Well, that's good for everyone if that's true, but it's the outlook, not the actual, because as you'll see in the graph, the actual sales volumes have actually ticked down slightly, with inquiries and listings up modestly over the month. Good. That the more buyers that are inquiring and the more properties there are for sale, the better the liquidity, the better transaction volumes, the easier it becomes to move. Sales expectations improve slightly at both the 3 and 12-month horizons. New buyer inquiries continue to rise at a gentle pace, with new listings activity also picking up at a slightly higher pace, as far as I can tell from other indicators. House price indicator moves into neutral territory. 12-month expectations point to an upward trend emerging. Okay, I'm going to just scroll down here to the actual graphs. Now, the way this works, for anyone that doesn't know, is that the Royal Institute of Chartered Surveyors surveys 200 of its members who are running estate agency businesses around the country and asks them, do you think prices are going up or down? And these they've got a whole list of questions. The questions are in this PDF, which I've linked to so you can see it for yourself. But understand that this is basically a balance, this graph. It's not price rises going up 10 or 20% or down 10 or 20%. It's the balance of surveyors that think things are getting better or worse. And in the first one here, the national prices for the past 3 months are less negative than they were, but still slightly negative. The regional prices for the past 3 months, this is on the graph on the right here. So Northern Ireland is looking very strong, and Scotland looking strong, and the north of England is looking strong. I do recommend you get into this because, as you can see, every region is showing something different here. National inquiries in the past month. So slightly positive, so rising slightly. Regional new buyer inquiries in the past month. And this is where it's positive in most places. It's up in most places, especially Wales, bizarrely. Very strong upwards tick in Wales. I'm not sure how many surveyors they've got in Wales and how seasonal that is. I don't know what the explanation for that sort of anomaly is, if it's an anomaly. East Midlands looking to be the worst area in the country for new buyer inquiries. Scotland and Northern Ireland both looking strong, as are the Northwest and the North. New vendor instructions in the past month. Rising, but less strongly than they were last month. That's that tiny little downtick in the graph there. I'm not sure if you can see that. Do I need to zoom in here for you? Let me get it bigger on the screen for you. So that's stock coming to market and new. So that's vendor instructions nationally and vendor instructions regionally in the past month. This graph here. The purple bar is the current month and the blue dot is the 3-month average. And what you can see is that all areas except for London are showing a net positive balance of new vendor instructions in the last month. That's interesting. The Southwest is showing the largest increase or the largest positive balance of new vendor instructions coming to the market in the last month. Right, agreed sales in the past month nationally they've moved actually slightly negative and slightly more negative, not much. They're around the zero. So what that means is about half and half of the surveyors are saying it's going up compared to going down nationally. That's not helpful for you in the regions. But here we've got regionally newly agreed sales in the past month. And you can see it's a mixed picture. So South East and East Anglia are showing a net negative, 15-20% negative balance. The East Midlands showing the most negative balance. Scotland and Northern Ireland and Wales showing the most positive balance for newly agreed sales in the past month. So it's a mixed picture. National price expectations. So this is they're looking ahead, right? Nationally, 3 and 12 months. The 3 months is still slightly negative. 12 months is more strongly positive. This is just their finger in the air, what they think. It's not a scientific thing. It's just a survey result. And it's a balance of positive or negative 12 months from now. So they're saying 3 months from now, they still think they're going to be negative nationally on balance. 12 months are more of them more positive. Regional price expectations in the next 3 months. Look at Northern Ireland. Streaking ahead. I mean, that's a very, very strong positive thing for Northern Ireland. I've got no insight to Northern Ireland. I have no comment to make or insight to provide for the Northern Ireland market. I don't know what's happening there or why. But it's the strongest regional market by a long way, as is Scotland. And what I'd be very keen for all of you to take on board here, for those of you who live in England and Wales, is that when you look at the national, the UK average, you've got to remember that the UK average is a combination of Northern Ireland and Scotland and Wales and England. So when Northern Ireland and Scotland are both strongly positive and the national UK house price average is neutral, it means that England and Wales are negative. And this is why national property market figures are completely meaningless and useless no matter who you are. It just doesn't make it, they are of no good. You've got to look at the national pictures. as opposed to the UK picture, and then regionally, and then prices breaking down as well, based on property types. But back to the details here again. So East Midlands looking the weakest on price expectations in the next 3 months, followed by East Anglia and the South East. London showing slight positive uptick there, which is interesting, as is the north of England and the northwest of England. Wales, despite the uptick in activity, is still showing negative expectations for prices for the next 3 months. And these two ones are now sales expectations. In other words, number of sales agreed. And look, there's a lot of positivity there. A lot of positivity. Now, I'm going to make I know this is 5 Fact Friday. What I'm about to say is purely an opinion based on the wide-ranging data points that I've got, which is that agents as a whole, as a cohort, as a group, as a demographic, are not brilliant macroeconomists. And anyone who's watching the interest rate discussion cannot have failed to have noticed, especially this week, and in fact, I probably should have included it in one of the facts this week, that the rate cut expectations this year are getting smaller and smaller and smaller and fewer and fewer and fewer. There is now talk in the USA of rates possibly even having to go back up because their inflation is showing to be too strong. There is plenty of compelling evidence that the Bank of England's rate is actually linked more strongly to what the Fed in America does than it is to what the Bank of England Monetary Policy Committee actually care about and want to do. We've been pegging them very, very closely for a long time. So if you look objectively, all of the signs for rate cuts this year are weaker and weaker. And it looks more and more and more like the rates that we've got are the rates that are here to stay. And that if there is any rate cut at all, it's going to be negligible as to make no difference to the housing market. But the consensus among estate agents is rates are definitely coming down this year. I had a mortgage broker send me a thing yesterday showing me that swap rates are going up and the mortgage rates are going to go up. And so I don't share the optimism of the surveyors in this graph of price of transaction volumes increasing for 2 reasons. First of all, I think there is a misplaced expectation amongst agents and the general public that rates are going to come down this year. Rates are going to come down this year. They're just not at the moment. Secondly, there is going to be an election announced, and when they finally announce the election date, which I'm expecting will be in the autumn, it's probably going to be in November. I have no reason for thinking that, other than that's when the US elections are, and I suspect there's going to be a lot more alignment between the UK and the US in terms of elections and interest rates. And when they finally announce the UK general election date, what typically happens is that transactions really, really slow down and reduce. Now, the next 3 months, yeah, maybe the transactions are going to pick up. But sorry, that's a bit of a ramble, but it was important because it's my observation on the market. Now, look, national average sales per surveyor in the past 3 months, they've ticked down and they're trending down the last couple of years. Let's hope that they keep going up. Regional all looks to be positive in terms of average sales per agent. National average stocks per agent, slight downtick there. I'm expecting the average stocks to continue to rise. That's my expectation. They have been trending up for the last 2 years. Can you see that? The last 2 years has been trending up. I think they're going to continue to go up. Regional average stock per surveyor is also looking positive. I'm not going to go into any more detail now, except for the one lettings thing, which is the national tenant demand in lettings market charts. Okay, again, national, useless, regional is what's important. But there is an overall national trend there of tenant demand going back over the last 3 years. And it's quite a strong downward trend. Just saying. It's just a fact that survey shows quite a strong long-term downward trend for tenant demand, which I think correlates with the downward trend in GDP per person, which gets worse as our population increases. Regional tenant demand in the past 3 months, though, is apparently positive everywhere except for London. So tenant demand in London the last 3 months has dropped. All right. So guys, whether you're buying or selling or renting, it is worth going to have a look at what the regional things in this report are. That's quite a long time on that one. I'm now going to move on to the Bank of England credit conditions. Now, there's quite a few things in here. The first thing, the most important thing, is that lenders reported that default rates on secured loans to households increased, and losses given the default also decreased in Q1. But both were expected to increase in Q2. In other words, lenders are expecting an increase in defaults on secured loans, in other words, mortgages, in Q2. And unsecured lending increased in Q1 and is expected to increase in Q2 as well. So default rates for both are expected to increase in Q2. That's a really important indicator for what's happening at the personal level. And this is relevant to the GDP figure that we're going to come on to in a minute, because national GDP does not equal GDP per person, and GDP per person is what matters in terms of personal wealth and ability to buy property. The graphs I wanted to show you were demand. Yeah, so demand for secured lending on both house purchase and remortgaging is trended down slightly in the most recent quarter. Right, that's that. That's that. The purple dot there. The expectations are that there's going to be a decrease in house purchase demand for borrowing, and also a decrease in mortgages after a very strong positive remortgaging thing in the last quarter. Okay, that's important. Next one, Halifax. The Halifax House Price Index. I mean, whatever your view, this is just useless, I think. And even though it's sort of saying that house prices fell 1% month on month in sorry, let me try and get the zoom in correct here. There we go. I'm not going to spend much time on this because there's no point, because it doesn't mean anything. What I do recommend you do is click on the detail. They can go look at their regional stuff always. But nationally, average, this is for the whole of the UK. But in fact, Halifax tends to have a stronger foothold in terms of market regions in the north of England. But it's saying that it's UK. And it's got an average house price, but that again is not actually an average house price. It's a weird convoluted complication and a hedonically regressed number. The monthly change is down 1%. The quarterly change is up 2%. What does that mean? The annual change is up 0.3%. It's just, and they don't tell us their sample size. And the sample size is so important. And we know from the Bank of England's figures that actual mortgage approvals are down. So what is this sample size? Because it's really important to help to understand what's going on. So it's a fact that I've chosen to include because it was reported widely that Halifax says house prices are going down, but it was really, no one talked about it. I just, even though that month-on-month thing supports my supposed narrative that I don't have, I still think it's useless. Still think it's useless. Useless, misleading, unhelpful, pointless, not intentionally. It's just not fit for purpose. And on to fact number 5. Here we have this morning's ONS GDP figures. This graph, which is on the page, I think is the most useful. It's just like, it's, oh look, okay, so July last year, this is the bit we're looking at. It's down and down and down, and now it's gone up a teeny, tiny bit. It's just flatlining. It's just flatlining. And when you dig down into the numbers, which I haven't done and I'm not going to do because I don't have Sasha Yanshin's patience. He's brilliant at it. You'll see that there's so many estimates and there's so many things that skew this data that it's just easy for them. You know, this is what I imagine happens, right? In the conversation is like, right, guys, I think we're doing everyone a favor if we just don't let them know how bad things really are, because that's just going to make everything get worse. It'll be like a worsening snowball. So let's just make out that it's okay, but let's not take the piss, but let's just make it sound okay, right? Because that's probably better for everyone. I don't know. And that was my fact number 5. Okay, that the GDP figures for February are up 0.1% in February and 0.2% in the 3 months of February. So it would look as though on these figures, we are looking that the recession will have been indeed a shallow recession, and we're out of recession and no longer a recession, people will say. But on a personal level, which is what counts, because the national economy doesn't help people buy houses, it's people's individual wealth that helps them buy houses. I'm afraid this doesn't change my mind about what's happening to the housing market. Okay, there are a surprisingly large number of you here, given that I didn't publicize this and it's the middle of a Friday morning. Yeah, Ensol says, looks like you were spot on regarding interest rates. I mean, that's just luck more than anything else, but I do feel like everyone was too optimistic about rate cuts happening. Kevin H says, he's sad to say that Southwest Scotland is seeing an uptick in activity and prices. That includes new build sales. So guys, I'm going to have to wrap it up there. I've got to crack on. Got lots happening today. I am working on something that's going to hopefully mean that this channel becomes more than just someone that we talk about how bad everything is in the market, and actually starts to be something that starts to contribute to an improvement in the transaction volumes and liquidity in the housing market, and makes it easier to move home whatever's happening in the housing market. That's what I'm working on. It's to do with the house price index. It's to do with agents. It's to do with ending the Rightmove monopoly. Rightmove is a great website. Rightmove's got lots of stuff. It's very, very popular. It's very, very useful. I've got no problem with the Rightmove website. But Rightmove's monopoly, which is undeniable and incontrovertible, that they have a monopoly, that they have used to corner the market for property advertising, I intend to show is directly contributing to overpricing, overvaluing, long sole agency contracts being signed, and therefore contributing to overpaying and the fall in transaction volumes. That's what I'm working on. Guys, it's great to see you. Great to be back. I'll talk to you soon. Have a fantastic weekend, and I'll see you on the next one. Bye-bye, guys.